The fall of Credit Suisse. Get ready to witness the shocking death of a global financial empire. To put this into perspective, by the end of 2022, Credit Suisse was managing a staggering 1.5 trillion Swiss francs in assets. I mean, they were sitting at the absolute pinnacle of global wealth, literally holding the keys to the world's most elite fortunes. So what happened? How does a 167-year-old, seemingly invincible global titan just completely vanish, practically overnight? Stick with me, because the chain of events that brought this massive giant to its knees is absolutely unbelievable, and the suspense only builds from here. Part 1. Forging a Swiss Titan, the origins of an empire. To really grasp the sheer scale of this disaster, we've got to rewind the clock. Founded way back in 1856 by Alfred Escher, this bank was built to aggressively fund Swiss railways, totally breaking their reliance on French banks. And from there, the idea spread like wildfire, and they basically conquered the globe. By 1951, they set up a direct telex to New York. By 1970, they had offices on literally every continent except Antarctica. For over a century, they were the absolute, unstoppable engine of global finance. Former CEO Jane Thiam once famously boasted about their pristine illusion of Swiss safety, basically saying they sell safety, not just secrecy. But here's the crazy part. This brilliant marketing completely masked the incredibly volatile, high-stakes risks that were secretly lurking right beneath the surface. Which brings us to Part 2, the aggressive expansion and Wall Street ambitions. So the foundation first started to crack thanks to this relentless, insatiable hunger for high-risk markets. They totally abandoned their traditional conservative Swiss lending model. In 1988, they executed the infamous burning bed deal, injecting hundreds of millions into high-risk junk bonds to bail out First Boston. Think about that. The reliable domestic bank had just pivoted to bankrolling speculative Wall Street chaos. And that single move triggered a massive unchecked acquisition spree. Throughout the 90s and 2000s, they were swallowing up competitors at a breakneck speed. We're talking taking a controlling share of First Boston, buying up Switzerland's oldest bank, outbidding UBS for Swiss Volksbank, merging with the Winterthur Group, and just burning $11.5 billion to purchase Donaldson, Lufkin, and Genret. They grew so fast, they completely shattered their own internal controls, unknowingly setting the stage for a spectacular, unavoidable disaster. Now we enter Part 3, a mountain of scandals and the underlying rot. This unchecked expansion led directly to a very dark era of devastating ethical failures. Over the decades, the institution racked up billions in fines for some of the most shocking offenses you could possibly imagine. A $1.25 billion settlement for withholding Holocaust victim assets, over $500 million for hiding transactions for sanctioned nations like Iran, a massive $2.6 billion for aiding U.S. tax evaders, and a £350 million fine for the secret Mozambique tuna bond loans. They were bleeding capital, for sure, but more importantly, they were bleeding public trust. But you know what was even more damaging than those financial penalties? The exposure of their highly secretive client list. Going all the way back to the 1977 Chiasso scandal, funneling $900 million into speculative schemes, things just got worse. The 2022 Swiss secrets leak, exposing 30,000 accounts holding 100 billion francs, plus a criminal conviction for laundering millions for a Bulgarian cocaine gang, proved their vaunted bank secrecy was allegedly shielding drug lords, human traffickers, and corrupt politicians. Throw in a massive Senate probe identifying 890 previously undisclosed Nazi-linked accounts, and the illusion of the safe Swiss bank was officially dead. This perfectly sets up Part 4, the final dominoes in the 2023 crash. By 2023, the entire financial world was literally holding its breath. Reeling from that internal rot and massive trading scandals like Archegos and Greensill, the bank's financials just flat out collapsed. For 2022, they reported a catastrophic 7.3 billion franc loss. That was their absolute worst performance since the 2008 crisis. The blood was officially in the water. And then, absolute panic set in. Fueled by rumors rapidly spreading on social media, terrified customers triggered a devastating, completely uncontrollable bank run. In a single quarter, you guys, customers yanked $69 billion out of the bank. Liquidity was draining way faster than anyone could possibly stop it. The lethal blow finally landed on March 15, 2023. Their largest backer, the Saudi National Bank, publicly stated they absolutely could not provide any more financial assistance. The second those words hit the press, Credit Suisse's stock price went into a terminal irrecoverable freefall. There was no going back. Which brings us to our final chapter, Part 5, Swallowed by a Rival, the autopsy. To prevent a cascading global economic meltdown, the Swiss government had to orchestrate a desperate, unprecedented intervention. In a rapid-fire sequence of events, here is exactly how the Titan died. First, a 50 billion franc emergency loan from the Swiss National Bank completely failed to stop the bleeding. So, the government forced UBS to fast-track an acquisition for just $3.25 billion. That is absolute pennies on the dollar. During the total chaos, regulators wiped out the AT1 bondholders completely, sparking massive global lawsuits. And finally, on May 31, 2024, Credit Suisse legally ceased to exist. As you digest this explainer, you really have to wonder, did this emergency takeover actually save the global markets, or did it just create an even larger institution that is now dangerously too big to fail? With only one megabank left, is Switzerland's economy actually safe? Or are we just carrying a bigger bomb? It's a massive ticking time bomb hanging over the global economy right now, and the entire world is watching to see what happens next.